Today we are going to start from foundation, right? Market structure. If you understand structure properly, everything else, supply, demand, liquidity, confirmation, whatever, will make sense completely later. Today,
Okay,
please close your mic, mute it. So today I'll show you diagrams only because before jumping to real charts, you need to clearly understand how price actually moves. So first of all, we'll cover the first part, which is uptrend. So let's start with the uptrend. An uptrend is a series of higher highs and higher lows, meaning buyers are in full control. Let me show you in a diagram. See here. This is our uptrend. So let me mark these higher highs and higher lows. This is our first higher high. This is our higher low. Again, higher high, higher low. So this is our uptrend. We can also call this an bullish market. Let me write down uptrend. In the uptrend, every time price makes a new higher high, it shows strength. Every pullback that respects the previous higher low shows continuation. So when the market is in uptrend, we only look for buy setups for demand zones, never counter trade. So remember, if you follow the trend, trend is your friend until structure breaks. All right? So this was the uptrend, or we can simply call it bullish market. Now we'll move to the second part, which is downtrend. Now when the market starts forming lower highs and lower lows, that's a downtrend. Sellers are in control and every pullback becomes an opportunity for them to sell higher. Just like in an uptrend, we buy from demand. Here we sell from supply zone. Let me show you in a diagram. Here we have lower low, lower high, lower low, lower high, lower low, again lower high, and lower low. Let me mark these highs and lows. Here, this is our lower high. This is lower low. This is again lower high. Here we have lower low. This is again lower high, and this is our higher lower low. This is called bearish move, or we can simply call it downtrend. Let me write down downtrend. Downtrend. Third one is called consolidation. Before we go on third, just focus on this downtrend. Just like in an uptrend, we buy from demand. Here we sell from supply zones. Again, never trade against structure. If the market is showing lower high and lower low, so institutions are selling, not buying. Now moving to the third part. Third part is consolidation. Let me show you. Consolidation is market moves sideways without breaking the high or the low. Market keep moving in a range, manipulating the retail traders. We have the liquidity from this side. You can see here. Here we have the buy side liquidity, and here we have sell side liquidity. This is called consolidation market. Let me write down here consolidation. Consolidation market. In consolidation market, the market, this is where prices building liquidity, equal highs and equal lows are forming. Institutions use this phase to collect orders before making a big move, or which we call impulsive move or aggressive move. So we don't trade inside the range. Fine. So we wait for a breakout or a retest after a breakout structure and following a trend. Always remember consolidation builds order, expansion clears liquidity. Expansion is called the breakout from upside or downside. Fine. Now I'll show you how market moves in different time frames. Okay. We can put weekly, monthly. Here we put the daily and 4 hour time frame. Daily, 4 hour time frame. See if the market is moving like this in weekly or monthly time frame. This is the movement in higher time frame. Okay. In weekly or monthly chart. Now in daily time frame, let's have a look. Market moves like this. Like this. So we'll focus on this area here. Leg down to leg up. So when this leg is down here, this zone right here is this downtrend. This I'll show you from here to all this area. This is this only this leg. This was the daily and 4 hour time frame. The lower time frame, how it looks. Let's take 30-minute or 15-minute time frame. See how it looks here. In 30-minute and 15-minute time frame, the chart looks like this. Takes this liquidity here, comes again, then takes this liquidity downside, then comes up again and continues moving like this, down, then up, then down. This is how it looks on 15-minute time frame or 30-minute or even lower time frames. It looks so messy. Now every big move starts from higher time frames and flows into smaller ones. Once weekly and daily time frame, we understand the overall direction, the main structure. On 4 hour or daily or 1 hour time frame, we identify the clean zones inside the direction. Then on 30-minute time frame or 15-minute time frame, we look for entries and confirmations. So when the higher time frame is in an uptrend, we look only for buys on lower time frames. Fine. This way, you will always be trading with the flow, never against it. The biggest mistake traders make is trying to trade 15-minute time frame without knowing what's happening on the higher time frames. And that's why they lose. From today, you'll stop doing that. You'll always start from like higher time frame, move down, refine, and then confirm. Fine. So, mini recap, okay? So, today we covered structure, uptrend, downtrend, consolidation, market flow from weekly, daily time frame for our 15-minute. Fine. Now, once you can read structure across time frames, you'll see the market with complete clarity. So, this was the foundation of everything. In the next class, we are going to introduce you Fibonacci retracement. I'll show you where, how, and why use it, and how it helps you find perfect pullback entries inside structure. Before that, your small task is for today. Okay, draw one uptrend and downtrend and a consolidation diagram yourself. Okay, mark the higher highs, higher lows, lower highs, lower lows correctly. Okay. Then open a few charts and try to identify structure on weekly, daily, 4 hour or 15-minute time frame. See you in the next session. Thank you very much. Okay, goodbye guys. Take care.